सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The IMF has come out with its World Economic Outlook, which it does on a biannual basis, once in April and once in October. So it's come out with the April edition now, and it's come out with growth estimates for the world as well as for India, of course. And it's also devoted quite a lot of attention to debt levels, both again for the globe and for India. So this edition of Macro Sutra, we're going to be talking about this. What does the latest IMF report say about India and the world in terms of growth levels as well as debt levels? So I'm TCA Sharad Raghavan, economy editor at ThePrint. And we have with us Radhika Pandey, Senior Fellow at NIPFP. Thank you so much, Radhika, for joining us. So now, Radhika, let's start with what the IMF says about growth in the global sense.
Yeah.
We'll get to India after that.
Yeah, so regarding global growth, the IMF has slashed the growth outlook for 2023.
Mm-hmm.
For 2022, the growth projection, the global economy growth projection was 3.4%.
Okay.
It has been reduced to 2.8% for this year. And when we say this year, it's actually we are referring to calendar year for growth. But when we talk about India, for India, they are talking about financial year,
right,
which starts from 1st of April and ends at 31st March of the next year. So that is one measurement clarification. But coming back to global growth, the baseline projection is that growth is going to fall in 2023 before again rising a bit in 2024. But again in 2023, they are saying that while the baseline, the usual projection they are talking about is 2.8%, but they are also saying that there are some risks to even this lower growth projection,
I see,
which is the recent financial sector stress that we saw in the US and EU in the form of banking collapse. So if such an event occurs again, it could pose a downside risk to growth globally and as well as for advanced economies, because they are saying that if that happens again, what is going to happen is that banks will become more cautious in lending, because the supervision will get tightened. They have already seen a big collapse in their deposits. There was a run on banks. So supervision is going to get tightened, and that will make banks more cautious in lending. And if that happens, lending will get tightened, and that will mean the credit flow in the economy will get more limited, and that will again have a downside risk to growth. So if that condition materializes, growth will further fall by 30 basis points or say 0.3%, which means that we are saying 2.8, it might fall to 2.5%.
Wow.
And within this, it is important to see that they are mainly saying that this slowdown is coming from advanced economies.
Right.
Within advanced economies, also particularly EU and UK are the two major economies who may see a recession or near recession kind of a situation in 2023. So that's the main outlook, that growth is likely to slow down. And this slowdown is more driven by slowdown in advanced economies. And this growth projection is also subject to risk if we have more such occurrences of financial sector stress.
Okay, so now this is what they're saying about the world,
right?
And it's also that it's happening more in advanced economies.
Right.
So coming to the emerging economies or the developing countries, what do they say about India, say?
So for India also, they have revised downwards the growth projection. So we must remember that there was a January update to the World Economic Outlook that came in the month of January, on 31st January. There, the IMF had projected the growth for this the financial year that has just started. The growth was projected at 6.1%.
Right.
Now, in April, they are saying that growth growth will be 5.9%. And for 2022, the growth projection by the IMF was 6.8. So it's a big, you can say, a sharp downward revision in growth for India. And even from January to April also, for the current financial year, it's a decline by 20 basis points. Mainly, again, due to two factors. One is monetary policy tightening, because in India also we have seen 250 basis points rate hike. In fact, in the recent meeting, the RBI left the rates unchanged, but the RBI has already hiked the interest rates by 250 basis points, and it has started showing its impact on lending. Home loan rates have become costly and so on. So that is one transmission, and the other is again the global factors, because if again these kind of banking collapses happen, that will lead to greater FPI outflows from India to more safe haven assets like the US Treasury bond. It will lead to appreciation of the dollar at the expense of emerging economies. So that is one channel. And the other channel, of course, is export slowdown, where if we see recession in UK and EU, it will have an impact on our exports, though services are doing quite well, but goods exports will suffer. So that is one thing. About China, they have increased the growth projection. China is projected to grow at 5.2%.
Because they're opening up as well.
They are opening up. So that is, so we are seeing, if we look at the global growth composition, it is being driven by emerging economies, particularly India and China. But that may not be a very good news. Just China is reopening because we have a more deeper trade relations with the EU, and therefore if the EU slows down, that will have an impact on our exports as well. So those are some of the channels which they have suggested. And the other technical thing that the IMF points out is that there has been some data revision. They are saying that they were anticipating that pent-up demand will play a role in 2023, but what they are saying is that pent-up demand has already played a role in 2021 and 2022.
I see.
So going forward, the pent-up demand pushing up growth will slightly dissipate, and therefore growth is likely to moderate. But again, in 2024, they are projecting a 6.3% growth for India. But overall, even if with this downward revision in growth, India continues to be the fastest growing large economy in the world.
Right. So now I have a question from the audience, and I'm also going to add a question to it, which is, so how do places like the IMF, how do they estimate growth levels? And that's from somebody from the audience. But what I want to also add to that is, what changed? How do they, when they estimated growth in January 31st, what were they not able to see all of these changes? Because just in 2 months, they've changed it by so much.
Yeah. So for the first question, how do they estimate? For each of these agencies, they have their own proprietary models to estimate growth. What exactly is the model, we do not know, because it's their model. But what we do know is that it is based on certain assumption, and then they do some regressions to estimate growth. And coming to, what changed from January to April? One thing is definitely the banking sector stress that we saw in the month of March. That has played out a role in estimating growth projection, because that has made all agencies very cautious about growth outlook, not just for India but for world and for advanced economies. We saw many agencies reducing their growth projection. We saw World Bank has reduced. We saw the ADB has also reduced. So we have been seeing, and so there is this possibility that if this event can happen, this may happen in again, and this may happen in other countries as well. So countries need to prepare, and it also complicates the conduct of policy, because it is understood, it is acknowledged that banks became very complacent, or financial institutions became complacent, that we are now going to have a low interest rate regime.
Right.
And now when the interest rate regime started to rise, it impacted the valuation of their investments, as we discussed for the Silicon Valley Bank case, where at the time they bought, the rate of interest was low. At the time they wanted to sell, the rate of interest rose. So there was mark-to-market valuation loss.
Right.
So all these things need to be captured. And when such a thing happens, it complicates the conduct of policy, because as we discussed in another episode, that whether central banks should raise or should not raise, given that raising interest rate will further aggravate the valuation losses.
Right.
But if they do not, that will have an impact on inflation. So these complexities playing out have really played a role in downward revising the growth.
So we can then say that there's no telling what they might say in the October.
Yeah, absolutely not, because it's become very uncertain for all central banks,
Right.
and even for these standard setting agencies to decide. And even if you look at their, if you read their reports, they say that it's very uncertain, growth is uncertain. And when we'll talk about debt overhang, uncertainty, vulnerabilities are growing. So we don't know under the surface how the turbulence that we are seeing, how it will shape up in the coming month. So that is why these are just projection. And even if we are right, at least on the direction, that should be good enough, because in terms of what is correct, what is not correct, those are very subjective things.
And also, if you're wrong by a few basis points, it doesn't make that much of a difference, as long as you're right in the direction that growth is going to slow down.
Directionally it is important, and we should take the guidance to that extent only, that yes, and that is what even the RBI or the government has acknowledged, that from 7% growth is likely to slow down in FY24. So directionally, yes, growth is going to slow down. By how much is, and again, there is no correct estimate, because even if in GDP we know that we have advanced estimates, then provisional, then revised. So it keeps on changing depending on what data we are considering at any point in time. So what information flow we have at any point in time, that will determine our growth projections.
Right. So actually, I mean, as we discussed in a previous episode, even growth for previous years keeps getting revised. So if you're talking about projections for the future, that's obviously going to be much more uncertain. So now coming to, we've mentioned debt a few times. And the IMF also, it's devoted a full chapter to it. So could you tell us, I mean, what is it saying? Is it in an alarming state right now?
So one of the consequences of the multiple shocks that we have witnessed over the last 3 years, shocks being in the form of COVID-19 pandemic, then the Russia-Ukraine conflict, the consequent supply chain disruptions leading to inflation, leading to higher interest rates. So if we assess the cumulative impact of all of these, what has happened is that the debt burden of countries has risen, particularly of those countries who are importers, who are dependent on food for say wheat. They are wheat importers. They have to spend a greater proportion of their revenues or their foreign exchange on importing. So all these conditions cumulatively has led to increase in the debt burden of countries, and which is what is being talked about in the third chapter of IMF World Economic Outlook. Also, there's another accompanying publication which was released by the IMF around the same time, which is called the IMF's Fiscal Monitor. Right. So that is again, and they are referring to these two in the chapter, as well as the Fiscal Monitor refers to World Economic Outlook. So Fiscal Monitor provides us database of debt and deficit. So it is that part of the publication which is wholly and solely devoted to debt and deficits. So what they are saying is that due to the pandemic, the debt to GDP ratio globally, it rose to unprecedented levels in 2020, because the governments had to spend more on welfare, on food distribution, and so on. So, and the revenues collapsed because of lockdown, because of collapse in economic activities. So, all of this resulted in higher deficits and therefore higher debt. So, they are saying that globally the debt to GDP ratio rose to 100% of GDP on average. Wow. Yes. So, again, there are country level variations. Advanced economies more, because we know that advanced economies did a lot of stimulus measures, because they had the resources in their hand to do that. Emerging economies could not do those kind of stimulus measures, but overall the debt to GDP ratio soared to 100% of GDP in 2020. Now comes 2021. Now it is debt to GDP ratio, and so if GDP will rise because of the low base effect, debt to GDP ratio will start to improve. So which is what we saw in 2021 and 2022, that debt to GDP ratio, after rising to unprecedented levels, it started to gradually decline.
But that's more because of the GDP levels, not because of the debt levels.
Exactly. Absolutely. So it was more due to the GDP rising, and also the revenues rising because the economies were opening up gradually. Now come to 2023, we are now normalizing. Again, GDP is going to slow down. So that will have an impact on debts and deficits. So from 2023 onwards, again, the debt and deficit of economies are going to rise. The kind of reduction, the steep reduction we saw over the last 2 years will get halted, and there could be an increase in the debt to GDP ratio, again because of the slowdown in growth, and therefore slowdown in revenues. Again, expenditures are rising because of inflation. And also another point is that because inflation has risen, interest rates have risen. So interest expenditures of governments have risen to a substantial extent. So cumulatively, all these will result in debt and deficits remaining elevated. So that pace of decline in debt and deficits will stall. And from now onwards, we could see an elevation in debt and deficits unless and until the economies follow fiscal consolidation. Of course. That means if they do not have a credible fiscal consolidation roadmap, of course, one needs to provide for vulnerable groups. There needs to be targeted spending. But the policy prescription that the IMF is advocating is that there needs to be fiscal consolidation closely aligned with monetary policy. So that is the main policy prescription of the IMF's third chapter, and also which tallies with the fiscal monitor. And within that, again, very interesting thing is the external debt. External debt has risen to, very high levels in absolute terms. In terms of GDP, yes, it has gone down. And therefore, we are seeing, under the India's presidency, India is now, advocating for debt restructuring, not only for low-income countries, but also for middle-income countries. We saw Sri Lanka defaulting.
Yes.
We saw now Ghana has defaulted. So Ghana is asking for IMF's assistance. IMF has given assistance. So we now have a complete discussion around rise in debt distress of not only low-income countries, but this debt distress has also spread to middle-income countries. And therefore, we need to have more active debt restructuring policies and more active role for multilateral banks like IMF and World Bank.
Right. And so now looking at the challenges that the world has faced over the last few years, we have a pretty great question from the audience, which is that between the COVID pandemic and what it did to economic activity, basically economic activity fell and came to almost zero in several countries. And now the Ukraine-Russia conflict, which has resulted in inflation. Which of the two has had a lasting impact on the world economy, and which of the two is likely to have a further lasting impact going ahead?
So I mean, it's a cumulative impact, because in terms of economy, if we want to see, the impact is supply chain disruption and inflation. So that is the impact. And because of high inflation, we have seen aggressive and synchronous monetary policy tightening.
Right.
I mean, never ever have we seen this kind of synchronicity in monetary policy tightening, that across the board, most of the central banks have been hiking their interest rates. So normally it happens that, it depends on the domestic conditions and then we respond. But here it is the synchronous monetary policy tightening that has happened. And because of this, the interest rates have risen. And the main consequence of this is that the debt levels have started to rise, and therefore the challenge is because the debt levels have risen, interest payments have risen, and therefore countries are in a kind of a situation where they have to decide whether to spend their scarce revenues on paying back interest, or should they spend on development activities. Right. And that is why more and more countries are requesting for debt restructuring, that either make our contractual obligations easier, either reduce the interest rate or elongate the tenure and so on. And therefore, even the private creditors, the IMF, the Paris Club, whoever is the creditor, they all need to come on board and decide on how to proceed on debt restructuring, because it is becoming a major problem. Up till the last decade, this problem was restricted to low-income countries.
Right.
But now it is spreading to middle-income countries. Within middle-income, also low-income as well as middle-income countries, it is spreading. So it needs to be addressed through active policy interventions.
So basically, it's not either pandemic or war. They've both come together to really, really mess with countries' finances and especially their debt level. So that needs some looking into. We have some other questions from the audience, which now there's a lot of talk about India being the bright spot in the global economy. So somebody has asked, with India's own growth being downgraded below 6%, can we still be called the bright spot in the global economy? And along with that, if we are to be the bright spot, does that mean that the global economy is now properly entering a recession?
Okay, so see, bright spot is used in a relative sense. Because India is still one of the fastest growing, it is the fastest growing economies across all the regions. If we look at the projections table that is released by the World Economic Outlook. So in that context, we say that India is the fastest growing economy, and therefore it continues to remain the bright spot. Now coming to the average global economy, as we talked about earlier also, the composition is changing. Earlier, growth used to be driven by advanced economies.
Right.
Now, growth is being driven by emerging economies. It is being driven by India and China. US is improving, as if you look at the projection, the US is improving, but with the UK and EU, there is a problem.
And so EU is a big bloc.
EU is a big bloc. So, and there are trade relations with EU. It's a big bloc. So, if there is a recession, though, it's a debatable issue whether it will actually slip into recession or not, the EU region as a whole. But yes, if we look at the challenges that global economy as a whole is facing, it is mainly because of the source of slowdown is coming primarily from advanced economies, and within that also from the UK and EU. So it all depends on what kind of policies they are taking into consideration to ensure that they do not, they try to escape recession, because that will have a reverberating impact on India and other emerging economies as well.
Okay, so now we have another question from the audience, which is, it's quite a complex question, which is, how much of an impact have the Ukraine war, the coming general elections of 2024, and the continuous non-cooperation of the opposition parties had on India's growth?
See, all these factors are being taken into account by the IMF when they are talking about a 5.9% growth. So they are taking into account the fact that supply chain disruptions or inflation still remains elevated due to Ukraine war, and therefore they have revised the growth projection downwards. So they are taking into account. And as regards non-cooperation, that is the role of opposition. They will not cooperate with the government, so that will be always and should be the way forward. But in terms of the economic events that are shaping growth projections, I think they have been taken into account by the IMF and the World Bank when they have come up with these projections, and that is why we see such a difference between January and April, because things have changed so rapidly during these 3 months that it required a review of growth projections, and that is why we see normally we don't see such a big difference between January and April growth projection. They are much closer, but this time around, particularly for advanced economies and for India, we see that there is a wide difference, and that is because of the events that have taken shape in the last 2-3 months. So we should be clear that these projections are quite updated and they have taken into account all these factors.
Right. And now we've talked about very, very macro things. We've talked about global growth. We've talked about India growth. And now there's a question from the audience which kind of zooms in a little bit, which is trying to talk about states. So the question is, Karnataka recently tweaked its labor code to allow 12-hour shifts. This is a minor but substantial reform. What reforms should the states enact to improve productivity and thus enhance growth? And what reforms do you think that the states are lagging behind in as compared to the center?
So we can talk about reforms in two categories. One is reforms particularly related to labor, and there, of course, this is a good move. And what more can be done is, making faster progress on decriminalization of minor offences.
Right.
That will really help in improving the working environment, improving the ease of doing business, and will help in improving the state's investment climate as well. And the other is a greater role of technology in inspection, in enforcement, in a lot many things. So that will also help in easing the working environment and improving the ease of doing business. And on the macro level, again, where states are lagging, as we discussed last time, that some of the states are not spending adequately on capital expenditure.
Right.
That is something that they need to look into, how to prioritize their revenues, spending in a way that it is more investment friendly. What needs to be done to make the rules and regulations more simpler, so that both private investors and foreign investors are more inclined to invest. So that is something I think, stress on capex, improving the infrastructure, improving the reducing the logistic cost, and these micro level factors. And these are, of course, these are low hanging fruits. These can be done. Decriminalization of offences, the government has done, and in fact there is scope for reviewing more such legislation and coming up with more such amendments. They send a very strong signal that the governments both at the central and at the states are more open to investments. So that will really help in improving the prospects of labor.
Absolutely. So there you go. The IMF has projected that growth at the global level is going to slow down, and the April numbers that they have are somewhat slower than the January levels. They have also projected that India's growth is going to slow down. I mean, of course, whatever happens in the world is going to affect India, but they've also flagged some concerns about debt levels, and that of course affects a country like India, but it is something that the world over countries are going to have to look at. India is taking the lead. It's using its G20 presidency to at least discuss these issues. But there is, of course, they need to decide on something and move it forward. On the states level, there are a lot of reforms that need to be done to boost growth, because it's only when the states come together and work towards a common aim with common regulations that India's growth can actually accelerate. And so that's all. There's actually quite a lot of uncertainty in the global economy, in the Indian economy. So maybe the October update, the October report that the IMF comes out with will have further changes in growth levels, in debt levels, all of that. We're going to have to wait and watch. But so far, this is all we have for you. Thank you so much for watching. But before you go, I have an appeal to make to you, which is that we at The Print, we really pride ourselves on the kind of work that we do, the kind of shows that we do. And, it takes a lot of time, effort, and most importantly, it takes quite a bit of money. So we appeal to you to please subscribe to The Print. The link is in the bio of this video. And apart from allowing us to do the kind of work that we can do for you, subscribing also gets you several benefits. One is that you get priority passes to the various webinars that we do with a lot of, guest experts who tell us about various sectors and, what's happening in the world, whether it's the economy or it's in politics or it's in the judiciary. We do a lot of webinars, and this will get you a priority pass. The other benefit is that you get to write your own view. We have a section called Your Turn, in which you can write your own view and write it as an article, and we'll publish it. And the third benefit, of course, is that we send out really detailed newsletters from our editors to our subscribers. It contains a snapshot of the day's news. It also contains a snapshot of our views about, what we think you will find interesting. So please do subscribe to us. The link, as I said, is in the bio of this video. And thank you so much for watching.